We're back with an early look at the stock futures this morning. All the major indices are down. Investors ready to see the bell ring in just a few hours to see if we see another big rally like today or we see things fall like we did at the end of last week. President Donald Trump putting a 90-day pause on higher import tariffs for dozens of countries, but he did hike levies on China, a whopping 125%.
Right. So joining us this morning to help us get a better perspective of what this all means is editor-in-chief of the Dallas Business Journal, Will Anderson. Okay, Will, so this morning we know the Trump administration is saying, hey, this was all part of their art of the deal, that they had anticipated this would happen. They're going to be working behind the scenes now to get some deals done. Do you anticipate we'll see less volatility if that is the case?
Yeah, I think definitely that I've heard a lot of relief. People are definitely glad to see this happen. There's also a sense of whiplash, though, and CEOs and business owners across Dallas-Fort Worth, I mean, they're still trying to wade through all the complexities because there are still some tariffs in place on auto parts. China is facing higher levies, so if you import goods from there. So there's also the sense of just wondering when the next big shift will happen.
The CEO of JP Morgan Chase, Jamie Dimon, yesterday warning of a recession. If you're an investor who's decided, you know what, I'm going to sit on the sidelines right now, do you just kind of wait it out? I mean, do you put your finger in the air? What do you do?
Well, it depends what, kind of what your time horizon is. And I think people sitting on 401ks, which is where a lot of Americans have exposure to the stock market, if you're thinking long-term retirement in 10, 20 years, you probably shouldn't do much, the experts would say. But yeah, if you're getting antsy, I think volatility is still in the cards. So hold on, and you got to be okay with some ups and downs right now.
Now, we do have a lot of people who are invested in the stock market, but there are plenty of other people who are not. What they are going to be invested in is what they're purchasing every day. So we're looking at these tariffs on China now being in place, 125%. What do you expect to see over the next 3-6 months?
I mean, I think you could expect to see anything. Like this trade war, the speed that everything's been developing is probably the most surprising aspect. Because businesses can deal with higher costs. Sometimes they'll pass those on to consumers, but we've seen plenty of companies say they'll eat the costs as well and, just operate at less profit. But the speed of change is what's kind of flustering a lot of CEOs in North Texas. So I think you should be ready for anything, and certainly rising prices can be part of that. A lot of goods are still made in China, although plenty of companies have diversified to other countries, and now maybe those reciprocal tariffs are going to be off or at least paused for a bit. But a lot of goods are still made in China. And yes, higher prices that come with tariffs. I mean, you shouldn't expect that to suddenly dissipate now that this pause has been announced. Plenty of companies already started raising their prices in anticipation.
Well, I know a lot of business leaders were hoping for at least a chance for things to settle down for a bit. So maybe the 90-day pause is a good thing. Will Anderson with the Dallas Business Journal. Thank you for joining us this morning.
Thank you.